Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Thursday, July 19th. Had a nice update yesterday. Again, low volume, but basically caused by good housing starts. We had some good econ data, and we had a nice little rally in tech. And I mentioned a couple days back, I said Intel's going to report. Watch how Intel trades, and if the bias is to the upside, regardless of how they report, right? It's how the traders and investors react to those numbers. And sure enough, they sold them down a little bit in the morning, and then they rallied, and then brought every other tech stock, semiconductors, up for the day. And we had a couple of good ideas, some trade ideas yesterday. Broadcom being one of them. The other day before had gotten decimated, but again, these stocks can only go down or up for so long before they reverse, and that's what happened yesterday. And on top of that, breaking out of yesterday, we had the day before, we did break out of this new range. As you remember, we've been in this range for 2 weeks, so we broke out of it, which created new buying opportunity, new inflows of cash, and that actually pushed markets higher and broke out of this base. Now, where do we go from here? Well, we are not overbought as of yet, as generally in the market's concerned. I did say that, although there are some major red flags and signs of cracks in the armor, we can still trend higher and get up to that 1390, 1400 and that inverted head and shoulders, which I'm going to show you as we go. But there are no sell signals as of yet, so even though they're cracks, that doesn't mean that we can't go higher. So we really need to understand that. We don't want to just plain blindly just shorting the market. That's not what we do. We want to stick with the trends, but knowingly that we have some issues in the market, we want to make sure that we're always cognizant of what's going on, and that's the main issue. So if the market is healthy, and I've been stating, be very, very careful here. If the market was healthy, we should have more money flows into more of the speculative groups, but we don't, right? We mentioned that before. We do have energy and financials. They have improved, but money is still flowing into consumer staples, healthcare, and the REITs, which I showed you yesterday, and of course bonds. So that's something that if the money was really there, pushing into these speculative sectors, we wouldn't see that. We'd see a total inverse, and that's not what we're seeing. Okay, so basically the bond market is not buying the rally. That's really what it comes down to, right? So a lot of people are complacent, getting low yields for trade-off for a safe haven asset. So that's something that's really concerning to me as a technician, and we don't want to see that. We want to see clearly the opposite. But we'll get into the charts, and let's get into our indicators like we always do. And I wanted to show you the BCM bar chart market momentum index. So we're right here now, right? So that means that we're not overbought yet, right? So we can actually go much higher and probably hit that 1390, 1400. We're only about 20-something S&P points away, and I'm going to show you that to you in the chart. But so we're not really overbought as of yet. So I could see this market go higher, as well as a little adding tribute to options expiration. General rule of thumb: options expiration usually has a positive bias to the week. Okay, you do have a couple of down days in between that make up the week. However, we do have a lot of skewed trades, a lot of large hedge funds, and they like to write calls and puts, and what happens is they try to protect that position to collect the premium. So the market could be a little skewed. Now what happens usually is that if the market does continue to rally today into tomorrow, you usually get some sort of reversal sometime next week. Now how deep and how big, nobody really knows, but just keep that in mind. All right, so we have the bar chart momentum index, as you can see here. We're not overbought. I don't have it today because I showed you yesterday, but the NYMO really didn't change much, maybe plus 20 points. Again, not really showing overbought readings. But I want to show you the VIX too as well. And as you can see, we do have a bullish falling wedge here, okay? Or if you want to call it a nice bull flagpole up in here, and then a wedge. So we're getting right down below here. Another move lower to break below the Bollinger Band will issue a buy signal in the VIX and would actually issue a sell signal in the market. But we haven't gotten that yet, as you can see here. So as you see over here, we closed outside the band, and what happened? VIX rallied, and S&P sold off. So that's something here to keep note of. But right now, no sell signal. Okay, Shanghai did pretty well, but again, I don't see. this to me doesn't say, wow, this is some big rally. Every day if you look at the sell-offs, they're larger than the buys, than the accumulation days. So the distribution days large. Look at the accumulation, very very small. Again, this is not telling me anything really good. Copper, again, just to show you that copper did not rally again for the second day. Not good. These are all little things that are cracks in the armor. That does not mean that we can't get long for the day, But if you are swing trading, you got to be very careful here. Maybe I would be, as of right now, if I was holding position, which I'm not, I would be initiating some hedges just to ride out the storm if in fact it did come. Okay, let's take a look at the bonds. Oh, actually, before that, let me just show you the stocks above the 50-day moving average. Back up to nosebleed. So this is one that's really overbought here. All right. Again, just a flag concern. Once we get our trigger and we get our close below yesterday's low or taking out the previous day's low, then I could say you can literally start looking to short the market here. All right. Now, I want to show you bonds, a 30-year bond. And if the market really rallied for the last 2 days, this thing really barely budged. So again, another crack in the armor. But I want to show you now the dollar, and I'm bringing you a 3-year picture, a 3-year view of the dollar. We are in this consolidation area here, and if you remember, we had that bull flag, and then we rallied, and we broke out, and then we fell back in again. So the dollar is consolidating and actually flagging back in. Okay, to be expected off a big move. However, and what I wanted to show you is that if this dollar does break above this area here, I think you're going to get a run of the highs. And if that happens, look what happened here in the S&P. This is the dollar S&P index. Look at the S&P literally just get decimated. And I think that could happen between now and the fall. Okay, at least a real scary sell-off, and then, of course, a rally into New Year. But this is something that may not happen. Maybe they'll roll back into here and then bounce around and chop around for the rest of the year. But this is something that we need to keep an eye on the dollar. Okay, now the dollar has been getting weaker because we have risk correlated assets that they're buying, so they're selling the dollar and they're selling all of the other high yields. However, some of the other high yielding currencies are actually rallying. So something, it's again a mixed bag. But I want everybody to take note of that, okay? Let's take a look at the regular U.S. dollar here, a 1-year chart, and this is what I was showing you. We're in this range, and we're just flagging again above the 20, above the 50, and above the 200. So very positive still. This is just normal and healthy reading coming off of an overbought reading, okay? Now, one thing I want to show you is one more thing is if I have here USB. Okay, yes, I showed you the USB. Okay, so let's go into the charts. Let's go into the indexes, and I want to show you specifically. Spiders daily, like to show the volume here. Lighter volume than the previous day, although we did get high. We did take out the previous day highs, which is also a good positive. We're above the 20, 50, and 200, and we're in this little wedge or rising channel, if you will. You can even look at this as one big bear flag here, big flag pole, and a flag pattern here. So a test up to this area would not be out. We did fill the gap. Okay, if you can look at this area here, we took out yesterday's high. So everything's turning positive. So today, tomorrow, I wouldn't doubt if we were actually trading higher. Again, low volume, concerning to me, but we are up in our MACD starting to curl here. My guess, we just kind of run up a little bit into the end of the week. Now, Spider 60-minute chart. We're back up to this area. Inverted head and shoulders, as we talked about back here, back a couple of weeks back. And now we're just trending high. So that 138, 139, 1390 in the S&P cash really would be the target. And this is the S&P cash, what I want to show you. I brought the chart in a little bit, and I wanted to show you a little bit of volume profiles, which is really a good indicator on it. Works more on a daily chart. Really doesn't work well on a 5, 15, or 30. Maybe the 60-minute because it's a little longer term out. But I wanted to show you is that we have these little volume pockets here. And once we get into this area here and that S&P broke that neckline, we really don't have much here. As you can see how the S&P just trailed up all the way up from February, January, and low volume all the way in here. We did have a little bit of selling, little volume in this area here. But so here's what happens. We're in this rising wedge. We're back up here at resistance now. Now a breakout of this resistance and hold and consolidate for a couple of days. We'll probably get the run to the 1400. 1415, 1420 area, and at least a retest of the highs up in here, okay? And we're really not that far away. As you can see, the S&Ps have been tacking on 20, 30 points a day. That doesn't mean that it can't happen, okay? And again, if you can look at our stochastics, we're really not overbought here. But one thing I want to show you why I say that this is possible to run up here before we sell off is we clear this area here, right? 1382. We really have no volume. Okay, look at the volume. Volume is actually dissipating here. So this is very positive, at least in the short term, that if we do break above and close, we have a volume profiles are showing us there's no volume. So we have a thin zone up in this area where we can actually really run up here, at least for the next week or so, or maybe a week we consolidate and then run higher one more time. So something to consider. Again, there's enough for the bulls and the bears, but now we got to wait for the market. Now here's concerning to me, the transportation sector. Can't have a rally without the transports, tech, and of course the banks, the financials. Just can't have it. It's not going to rally. They'll rally, but they're not going to give it a full-fledged, trend change up higher and into new highs. Very concerning to me here. We can't. Market rallied yesterday, led by the S&P, not by tech. Well, actually, tech did well yesterday, but in general, transportations didn't do well, and the semis the small caps didn't do well as again. So concerning. Another concerning area. Here's the Russell. We broke out, but nothing. You can see here, nothing really that says, wow, what a great day for the small caps. Not at all. All right. So those are another two flags that I like to point out. Now the rest here, I want to show you the SMH is a semiconductor ETF. Big day yesterday. Big day yesterday. And I mentioned watch the semis. Now we had a big day consolidation. I would not. Well, we've actually really had a bad. As you can see, the sector got decimated the last 7 to 10 trading days. I'd like to see a pullback in this area here, right up in this 30-45 area, 50% of this candle, and then I would say look to enter long. Look for a beaten down semiconductor, and then look to enter long. One comes to mind, AMD. They closed. They report after the close today. Now they guided lower. If they are positive and guide higher, or if they come out with better earnings, that stock's going to explode to the upside. So that's something that I want you to take a look at, as well as I'll be looking at for tomorrow's trade. Okay, so that's the SMHs. Qs, regular tech, did well, much better. At least we have inline volume. And I want to show you the last but not least is the diamonds, which is the Dow Jones Industrial Average. Okay, all right, guys, that's really about it. But again, a lot of pluses and minuses. I would say if you're swinging short, I would tell you to put on some hedges. If you're just regular day trading, stick with the trend until the trend changes, okay? Have a great day, and we'll see you tomorrow. Take care.